Greetings, Saturday morning to all you coffee drinkers out there. I have mine, and let's rock and roll. D7 here with Grok Trade. Okay. The chart that we're looking at right now is simply a daily chart on the S&P 500, and what you see here is going back to November. So November, December, middle of December, we have just been churning sideways, far more red days than bullish days. It has been just a train wreck for the last month and a half. Big sell-offs taking place at the end of November, going into December, a little pop-up, and now we're selling off yet again. We've been in a trading range on the spiders from 450 up to 470. 20-point trading range on the spiders. If I zoom out so you can see where we're at in the big picture, what you have is a big uptrend that we were in this rising wedge. We broke down. This is spiders, okay? The S&P 500. We broke down here, and I blow it up. You can see this. But look at, we broke those supports. The rising wedge broke down. We do a bear pullback. We short. So this, we short here, down, down, down. We go up, bear pullback. We short again. Then it goes into a falling wedge. You wait for a breakout, the pullback, the higher swing low, buy off of a hammer, up, 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 up. Bull pullback, buy opportunity, up, up, up. High base, buy opportunity. It never came to fruition. It dropped, so we wouldn't have been in. We dropped down, not a buy area, guys, but we're at a support line. Now, hold on a second. It is a buy area because we have multiple hits. So let's go to this line. Major swing low right there, okay? Major swing low. We're looking at this line. Major swing low, 1, 2. So yeah, buy opportunity right there off the trend line. Up, 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 high base, another opportunity to go long. It never did. It failed, came down. So you would not have added to a position there. Pulls back, pops up, tries to go up again. It cannot do it. We have what is called right now a ascending triangle, or arguably, because this line is slightly going higher, if you look at this, this line has an upward trajectory. So you could argue this is a rising wedge, which is more bearish than it is bullish. Okay, I get it. That's a fair thing. Or you could say this is more flat than it is rising. Like here, if you look at this rising wedge, two lines with trajectories very steep, but pinching together. You can see how they're pinching together there. This does not surprise me. We dropped resistance, so support, broke support, resistance, then we dropped. Doesn't surprise me. Now we come back. Is this an ascending triangle or is it a falling wedge? Let me know in the comments down below if you would call this a rising wedge. If so, it's bearish. Or would you call it an ascending triangle? If so, it is bullish. I'm really interested here because it could go either way here. There's no right or wrong here. But I want you to put down there ascending or rising. I'm interested. Let me know that. Because I read every comment that you guys do. I love them, actually. I'm here on a island by myself, on a Saturday morning, drinking coffee. My wife's in here wrapping gifts. We're in the townhouse here in Tampa. And so anyway, let's get after the charts. So that's what you guys are after. Anyway, I'm really interested to know that with you guys. So let's go over here and show you this trend line. We're at major area of support. We have the 50-day moving average coming up. That could be support. Will we be support? What I do know is when we're dropping, it happened on huge volume. While this is dropping the last couple of days, massive volume, guys. There's a lot of selling taking place up here at these upper levels. We have a big M. See this? It looks like a big M. M stands for what? Say it out loud. Say it together. M stands for murder. So we have a big M, but it's only confirmed if it breaks the lower trend line. If you go to technical analyst books, you'll see it needs to break this low, so the 250s, before it's confirmed. I disagree with that. When it breaks that trend line, it's confirmed in my book. Okay, I've been trading in live markets 23 years using technical analysis, and been teaching it over 17 for myself and my own company. We mentored for 14 years. So just trust me there. If you wait until it goes down here, after it breaks, it'll drop just a little bit, and then that'd be a buy opportunity. Bulls will come running back in. So you're too late to the party. I like it to get in earlier. If it breaks down there, boom, short, 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 and then get out, take your profits there before it rallies back up higher. Okay, that's what we're looking at. But if you go here to the diamonds, again, daily chart, diamonds, 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 the thing that so this, we came down, we do a jab, we rally higher. Now that we have this weird little humpy thing, I'm going to go over here, take this line, go to this line and put it there, take this line, snap it there. I'm using, look at this, perfect, bam, bam, bam. If you go here, you would think, oh, you didn't draw your trend lines correctly, and that would be a mistake to think so. So anyway, here's what we're looking at. We're dropping, we're in a symmetrical triangle on the diamonds. We're now below the moving averages. I like to be above the moving averages, that's bullish, below them are bearish. So we have a lot of problems. I mean, what a whipsaw. You know, Wednesday we had this huge rally to the upside, and Thursday, bam, to your face, and then bam, Friday, just down. Horrible. Qs, let's take a look here at the Qs. Qs are an uptrend, higher swing highs, higher swing lows. However, do we have a shoulder, head, and shoulder? If so, the neckline would be there to here. We're not even close to breaking the neckline. If this is a shoulder, if that's a head and that's a shoulder, that is the neckline. So for it to even break the neckline, we have to break this lower trend line. Okay, so there's a number of areas. I don't like to crowd up my stuff. I'm going to get rid of that. But I would put in, I need to put in another line here. There to here. I'm using TradingView, links down things. There's a free version of it. I just like to hover over, whoops. I like to hover over and snap by holding down control. If you hold down control, if I move this and hit control, it snaps to the closes. So I hover over that point and let it go, and it's perfect. So it's perfect there. So you can see we have, you know, if I were to draw another line, watch this. So this line, support, 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 support. We broke that support. It's more bearish than it is bullish, guys, on the Qs. Not good, but we're extended to the downside. Will we break up? Maybe, but the problem is on the daily chart, we close below the 50-day moving average. It's usually a bad sign when and if that happens. Below all the other major moving averages, not a good sign, not a good sign. Go here to the daily chart on the Qs. We've been going, I mean, we had a lot of selling here, then we pop. We have a lot of selling here. Will we pop now? Maybe. We may pop, but we have a lot of healing to do to get back above those moving averages, above those trend lines for us to be bullish. The Qs really need to get above, I would say 400. If we can get back above 400 and stay there, we are out of the woods. But up until that point, guys, this is bad news, not good. Russell's 2000 usually will lead the markets one way or the other, and sure enough, it had. The Russells since November have been going straight down when the markets have been going sideways since November. But Russell's 2000 came down, found support right here. We're going to bounce. No! Phooey! Bam! To the downside. Down, down, down. Finally, way overextended. And then it does this little bear pullback. Then you short into that, down, down, down. But now we're at this major trend line. This major trend line. You can see this. If I go here, support, 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 support. We're at those areas right here. We're at those areas. Do you see that? So will we find buyers here? The chances are really highly likely we will find buyers right there. But let's see what the financials say for the daily chart. Daily chart, we're in a symmetrical triangle. We're going sideways. We, you know, since October, November, we've been down, 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 just like the Russells. But now we're trying to rally back up. Guys, I've been seeing a lot of QE taking place because when the markets were going straight down, like Thursday, for example, financials were way up on Thursday when the markets were way down on Thursday, right? And then Friday, it gave up the ghost. You know, it's just horrible. But we're inside the apex of a symmetrical triangle. We actually had two symmetrical triangles. Look how symmetry this is for you guys who are engineer types who like geometry and whatnot. Isn't it funny how these things, you know, and I can almost guarantee you, because I have trading algorithms, that this is algorithmic induced, if you will. So there's a lot to be said about that. And anyway, what we're seeing here is congestion. We're more bearish and is bullish because we're heading down to the lower area of the support line and below the moving averages. I need that support line to hold as support. If it breaks down below, I would say if the financials break down below 38 on XLF, that's going to be a problem if we get a close there below 38. Bad news, especially if we close below 37.70. If we get below 37.70 on the financials, guys, that's bad news. So what I want to do is take a quick look at the weekly chart. Sorry for the coughing. I just got up not too long ago and drinking coffee and stuff. But if you look at the financials daily, weekly, we have bearish divergences across the board, and but we're very sold there. The RSI is going to, what looks to give us, if we get any bounce at all next week, we should have a bullish divergence on the RSI, and we could rally up. The question is, will we stay bouncing between those two lines, heading up until we get to this area? So we'd go up until we get to that area and then drop. So that could happen, or we could just drop immediately now and we put in our highs, guys, for the umpteen. I mean, who knows how long it will take to reach those highs again. Because, holy smokies, we are teetering on death. We're at these major support areas, and if they're broken, bad things will happen in the markets. Bad things. So if you go to the Spiders weekly chart, we need to stay above those moving averages right there. The Spiders, we should be waking up to problems if we get below 458. Below 458, we should be like, whoa. But if we get a close, say, below 455 on the Spiders, ouch, guys. The only hope we'd have is the 20-week moving average as support. But if it breaks those trend lines, it's over. It's just not good for the markets. Look at the huge selling volume here on the sell side. And usually in the market tops, you'll see these big candlesticks, and you'll see these big drops, big pops, big drops before it commences. You get this big drop in the market. So that's what it's been looking like for the last month or so. The question is this the top? It could be. But every time you think that, QE comes in and presses the market back higher. And, it's funny how powerful the Fed can be to the markets. But they have a big problem with inflation. Big problem. And, oh, by the way, side note before I look at the rest, we are doing a mentorship January 15th, 16th, and 17th. So 15th, 16th, and 17th. Feel free to jump in the class if you'd like to join us. So if you look here at the diamonds, higher swing highs, higher swing lows. But we had this pop 2 weeks ago, but there's no follow through. We were selling into it already. That's problematic. Above the moving averages, got to stay above the moving average Qs. If you look at the Qs are pitching at major support, guys. If the Qs get down below 384, that's a problem. Definitely if it gets down below 380. Bad problem if we get in those areas on the Qs, okay? Because what could happen is we could drop, and we'll get these long shadow. See these shadows? You get this long shadow, and it'll rally back. So just know that is, if we get to those levels, you need to be sure that a lot of people will be selling into that. But if the buyers come in at those lows and you get a big hammer and it comes back up, then chances are it's not ready to drop yet, and those could be buy opportunities. The Russell's 2000 has already broken 3 weeks ago, broke down that support line. That support line is acting as resistance, and now we're basing sideways. This tells me that the markets are probably broken because this had already broke the trend lines. I think the rest will follow. Russells are always faster than the rest of the markets. Financials also, but the financials we've already talked about are right here at a major support line. If we drop, that is not going to be good. US dollar weekly chart is up, 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 building a high base. It's more bullish than it is bearish. And silver weekly chart, we rallied up, 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 down, 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 down. We're at major support. We hammered out. Silver is a buy. I can't say, this is educational purposes only. Technically speaking, this would fit a lot of our rules and mentoring to say there could be buying opportunities there. Gold, also, big symmetrical triangle. We tried to break down. We didn't do it. There's that lower shadow. Remember I was telling you, if it goes down low, 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 you can find buying opportunities. Buying opportunities down here at low. Rallies back up. That's advanced. We have an advanced mentorship that I teach. Actually, nobody should be trying to pick these bottoms. You pick a bottom, it's like catching falling knives. You can't do it. Catching falling knives with your teeth. You can't do it. So if you're skilled, you can. There's techniques to use to be able to, capture these things. So we're up, up, up. Look for gold, a lot of upside. VIX got scary, man. We had this special triangle breakout. Boom! To the upside. Big pullback, acting as support. This could rally north again and very easily. VIX could get crazy. And Bitcoin, down, 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 at an area support soon. And if it gets down to this support level, that might be a buy opportunity for us if it holds, meaning that I'd like to see a hammer here or a bounce for confirmation. But if it just is to go down and break this, then we need to wait for another support area to be looking for buy opportunities on there. So that's it. Saturday morning, and I hope everyone's having a great weekend. And Christmas, have you got your shopping done? Let me know if you got your shopping done. Is shopping done, or are you still doing it, or do you leave it up to your significant other to do the shopping for you? So my wife does a pretty good job at shopping for us, right, Janelle? You can't hear her. She goes, yes, I do. She's on the floor down there. I don't know if you can see her. She's rapping. So, but anyway, yeah, if you want to do a mentorship with us next month, 15th, 16th, 17th, so Saturday, Sunday, and Monday. Monday, you'll go into the live trading room to see Mark doing live trading. And, no, it's fun. It's a good time. You know how to find us. Just signed up. So, that is it. Hope everyone's well. Well, I'll end with this, guys. Inflation is off the charts. I'll share something with you that I was saying roughly 12 years ago. I said, this is, if I got my days right, it was back when we were between 16 to 18 trillion dollars on debt, whenever time frame that was ago. But I remember telling people, saying that we have a problem, that if our debt doesn't take care of itself, that inflation will take care of it for us. And I said there's an argument to be made for hyperinflation. My business attorney back then kind of thumbed his nose at me. We have the utmost respect. He's no longer with us. He's passed on. He's in heaven at this time. And this individual thought that was a reckless, I'm putting words in his mouth, but he felt like it was irresponsible to throw around the word hyperinflation. It's funny how Jack Dorsey brings it up and people wake up to it, in 2021. But as a visionary, as somebody who has started multiple businesses, and I was the first to do trading videos. You guys, my trading videos, I was the first to do them. I was doing trading videos before YouTube was around. I was doing trading videos before there was even a way to watch a video on the internet. In 2004, my videos I had to deliver at Trade to Win. You can go and find it under free trading videos at Trade to Win. But you'll see in 2004, the only way to watch videos were through a zip file. Crazy, right? Zip file. So anyway, I was the first to do that. I have several firsts, right? Several firsts. And I was the first to do internet car sales. So I own AutoIndiana.com and AutoIllinois.com. I was the first to come out. VCs wanted 60% of my business. I thought that was too aggressive, so I walked away. Biggest mistake in my life. There was only a couple of us back in those days who were selling or trying to move towards automotive sales online, but we were doing that. But anyway, I saw the argument to be made for hyperinflation. Hyperinflation is a very real thing, and it could happen. That just means I hope that hyperinflation just means 50% or more, and wheelbarrows of money to buy a loaf of bread. It's a train wreck. Could that happen here in the United States if we were to lose the world reserve status, and if our debt continues to soar out of control? There's no other option, because I don't see us paying off our debt, but I do see taxes going up drastically. When the tax cuts that we have here in the U.S., the sunsets in 2026, right? So it's we're only talking 4 years away before taxes will they'll be extraordinarily higher than what they are today. So a lot of those, there's a lot happening right now, and the Fed doesn't have any more arrows in its quiver. And now, instead of lowering rates, they don't have a choice but to raise rates, which they said they're doing 3 times in this next year. That just tells you what direction we're heading. There's no easy way of saying it, but the markets are set and poised to finally have its correction. Everything is set for that to happen. But it won't happen until it happens. And we almost need a catalyst for it to tip over and for the markets to really sell off hard. It could be this inflationary problem that we have. So mark my words, if you start to see the Dow down 1,000 points, 1,000 plus points, the first time we get a big sell-off, next day we'll be up 800 points, right? But that should be the arrow over the bow. That should be the warning shot to let everybody know capitulation will be setting in. You'll see massive volume. The highs will be set. I'm seeing remnants of a high right now in the markets. I'm not seeing everything I need to see to say this is the market top, okay? And usually you don't call the market top at the top. It's after you see certain things and there's a drop that commences. I look for those trend lines being validated or being broken and violated. As soon as those trend lines are broken on the larger time frames, we are in significant danger in the markets, and it'd be the time to be in cash if you're not there already, and to be looking for short opportunities in the marketplace. So there you have it. I hope that was beneficial. If you like this sort of talk at the end, if you made it all to the end, you're crazy, right? You have better things to do than listen to me drone on and on these monologues. But let me know you made it. Just say you made it. Only you and I will know what we're talking about. Nobody else will know why you said made it. I will. And everyone who made it. So let me know if you made it. And if you like these, give me a thumbs up. If you don't, give me a thumbs down. They don't show us some thumbs down anymore. So you can give a thumbs down, but no one sees it. You might see it, but no one sees it. I don't see it. It's a change that they made. I don't know how I feel about it. Sometimes I like if I see if people didn't like what I was doing, or if they did like what I was doing. Either's fine. All right, take care. I'm blabbing. Take care, and Merry Christmas to everybody out there. We'll see you. Bye.